And welcome to all budgeteers. This video presents deposits into banks drawing together all income from which expenses can be paid. Deposits can be income from a job, investments, refunds, or reimbursements. The income and banking category is intended to analyze taxable income from employment and investments. The income adjustments category is intended for non-taxable income such as monetary gifts, refunds or insurance reimbursements, and transfers from checking accounts to investment accounts. There are two dates for deposits. The first one is the deposit date, the second is the date of the check. At the end of the year, if you get paid on December 31st, that paycheck will be covering January's expenses. In order for the year-to-date income report to match your W-2, that paycheck has to be included even though it is applied to next year's first budget period. Entering take-home pay is easiest, and the deductions method can be incorporated when or if your employment situation changes and you want to see more details. Payroll deductions can be tracked, but unlike expense breakdowns, income deductions cannot be noted. That is, all deductions have to be entered. You could enter the gross wage and have a single entry for all deductions, resulting in the net deposit. The prompt message identifies the table, with the code in use being displayed in the column title. Looking at Table 925 entries for each method, you can see the table values that populate the deposits screen. Subtitles are also customizable in Table 924. Estimate earned interest using this formula so you can include it in your budget. If you have a savings account or CD that pays interest monthly, enter that estimate to update the value of the account. If interest earned on a CD is transferred to your checking account monthly, create that transaction on the adjustments display by creating a debit to the CD account earning the interest and a credit to the checking account the interest is being transferred to. If you have a rainy day fund, that is, a savings account for unexpected expenses, you can establish an estimate for that transfer of money from your checking account, and both accounts' ending balances are adjusted. Once entered into future budget estimates, you can get an idea of how much rainy day fund you could save up several months into the future. The transfer process also works in reverse. Here you can see that I transferred $5,000 from savings into checking to cover the credit card bill being paid in this budget period. If you have a certificate of deposit that is maturing and you're planning on cashing it out, establish an estimate of that transfer in advance to view the result in the deposit account. When reported on the month-end income detail report, you'll have a complete picture of where your money comes from and how it's distributed. Tracking income and adjustments to income creates a complete budget overview, and watching your account balances grow can be encouraging. Adding default savings adjustments can set aside those dollars for the future while creating earned interest income along the way. It's always better to have the banks paying you interest than for you to pay them interest. Making deposits and moving money around is pretty straightforward, so this can be a short video. Until next time, good luck with your budget.